We are going to do this as a very special webinar on a new asset class that we've just launched. This is an opportunity to participate in a commercial real estate pre-lease investment option. I have two of my colleagues on the call as well, and they'll be walking through the opportunity, but maybe just a brief introduction about what we do at GRIP and then what this asset class means to us. Aman, if we could just go to the next slide, please. There were three values or three asset types, three core attributes of an asset that we wanted to introduce when we started GRIP. And to us, that actually came from the word GRIP itself, which was to hold on to something or to have control over something. The first one was to have an asset-backed opportunity. The second was to create opportunities which have fixed income or stable income that come every month, every class, that gives you an opportunity to diversify away from assets which are correlated to the stock market. There's no better time for me to give you an opportunity or to explain that in today's environment where there is incredibly high volatility in the stock markets. And if investors are able to combine that alongside fixed income, non-correlated opportunities, it builds a healthier portfolio. We are excited to be able to add in new investment class that satisfies all these three criteria in addition to the opportunities we already provide on GRIP. Aman, if you go to the next slide. Since we started GRIP in 2020, June 2020, we are proud to have facilitated 210 crores in investments from investors such as yourselves. We've returned close to 44 crores in returns to investors through these periodic payments, having over 10,000 unique investors participate on our platform. What we're also excited about is that an average investor has nearly 3 investments on GRIP, which means that they're participating frequently on the platform and building a diversified portfolio of fixed income opportunities. GRIP today offers 3 investment options, all meeting the same criteria of being asset-backed, stable income, non-correlated to the stock market. Our first product was lease finance, assets like vehicles, furniture, electronics, machinery, leased to corporates with a minimum ticket size of 10,000 rupees. Our second asset class introduced in September 21 was inventory finance to corporates for a very short duration, anywhere between 1 to 6 months, again being associated with corporates for a minimum ticket size of 10,000. And our third asset class that we're going to spend time talking about today is commercial properties, pre-leased grade A commercial spaces. We're excited that our investors come from across the country, tier 1, tier 2, tier 3 cities, but also from countries across the world, nearly 57 countries where NRIs are participating on and giving us a global footprint of being able to provide such investment options. On this note, I'm going to hand it over to Siddharth Sangal to talk about the opportunities that we have today. More importantly, I'd love for you to use the chat box, the Q&A section, to put in your comments and questions. We will try to spend the next 15-20 minutes talking about these slides we have and the information we want to share with you, but we'll be very happy to use the rest of the time to answer any of your questions. Siddharth, over to you.
Hey, thanks, Nikhil. Good to be here with everyone, and thanks for joining in. This is Siddharth. I joined GRIP recently as the CIO and also heading the new initiatives. Super proud to bring this opportunity to you. We have been able to fractionalize it vis-a-vis where the market is, and would love to talk more about it in the next half hour. Aman, if you could go to the next slide, please. So really, the first and the foremost thing is, how are we sourcing our investment opportunities, and how is it different from what the platform has been doing till date? So until now, the platform has been sourcing leasing and inventory financing deals, and in most of the situations, GRIP has been a sourcer and originator of those opportunities. With some of the other products, alternative products, we as a team felt like there's an opportunity to partner with players who are already doing a very good job of building out those alternative products. And the first product that came to our mind was real estate. What we're really looking to do is tie up with leading commercial property platforms that are fractionalizing real estate, for their users at 25 to 30 lakh rupee an investment. even more so that we can offer it to our investors at now close to 1 lakh rupee of minimum investment. Uh, Really, the role that these platforms play is to identify the commercial property, do all the diligence, execute on the documents, find tenants, and in some cases even undertake fit out work. And they would often acquire these properties in SPVs or special purpose vehicles. Uh, our intent is to use a technology partner of a SEBI registered AIF and fractionalize these investments, as I said earlier, significantly, and bring that to our users who could participate in these opportunities and might not have been able to do that until now. Aman, next slide, please. So I already talked about GRIP versus other CRE platforms. I talked about the minimum investment ticket size, where it's 25 to 30 lakhs on other platforms, and we are looking at a 1 lakh minimum investment ticket size. What this does result in is also a marginally lower return for our users, and we'll cover that in a lot more detail in a couple of minutes. But we are partnering with an AIF in this case, and so there is fees for the AIF to enable this transaction, and so the returns are a bit lower, but not significantly lower, which would dissuade you from investing. And we'll come to that. On the next slide, please. So for the first opportunity, we tied up with a very well-regarded, well-respected player in the market called Strata. You might be well familiar with Strata already. If not, they have now, they have more than 500 crores of assets under management. Up until now, they have executed a bunch of deals in the warehousing and industrial space and also office space. Across these investments, they manage more than 2.5 million square feet of leasable area. They have investments pan India in Jaipur, Mumbai, Bangalore, and other parts of the country like Chennai, Hosur, and they have really marquee tenants in their portfolio. They're done a fabulous job of signing up with those tenants, like a Capgemini or UBS or Randox. So we really think that they are among the best partners we could launch a deal with today and in real estate, and incredibly stable. They're well funded by some of the top VCs as well. And so as asset managers, we think they would do a great job over the next few years to deal with these properties and any issues that might crop up. So talking about the first opportunity in a bit more detail, this is an opportunity in Bangalore, in a micro market called Mahadevpura, which is really at the in northern Bangalore, very close to Whitefield and the outer ring road. It's a commercial building. Bangalore is obviously known as India's Silicon Valley. It needs no introduction. It's probably India's largest Grade A office market and has seen tremendous growth over the years. And this particular asset is pre-leased to an international sportswear brand, which we'll talk more about in a minute. It's also pretty well connected. It's 40 kilometers from airport, which sounds like a lot, but those of you who are from Bangalore, it's really not that much. It's 3 kilometers from a railway station, and it's about 300 meters from a metro station that's coming up very, very close to the site. The total building itself has a leasable area of close to 135,000 square feet. Strata is looking to acquire 6 floors, or G plus 6 floors, that would total to roughly 76,000 square feet. They have so there is you'll see on the table on the right, the picture on the right, that they have 11th through 15th floors on top, and then they have G plus 1 at the bottom. So it's a grade A modern building, best in class, and Strata is looking to occupy 7 of those floors. We spoke about the location very briefly earlier, but again, Bangalore is a hub for global innovation, technology, and finance, and startups in India. Again, that's no news. The population is young, well-educated, high literacy rates. Again, one of the best office markets in the country, with massive talent pool, a ton of engineering colleges, business schools. 35 out of 90 unicorns in India are based out of Bangalore, which obviously generates a ton of employment, and then it also exports accounts for 40% of India's ID exports, which also obviously results in more employment. We talked about the connectivity a couple of minutes ago. As I said, the site is right off the ORR, in very close to Whitefield, where you see the Madhepura metro station that's upcoming. It's within 300 meters of that site, and a very, very strong location. So, moving on to the tenant, the site is pre-leased to one of the world's largest designers, manufacturers of athletic and casual footwear, apparel, and accessories. Uh, they have been prolific sponsors of sports teams, including cricket, football, F1, athletics. They have been in business for more than 70 years, presence in 120 countries, 16,000 employees worldwide. India has close to 2,000 employees, and this particular site is going to serve as is going to house more of their India growth plans as they go beyond the 2,000 employees. In 2021, this is a public company. In 2021, they clocked more than $6.8 billion of euros, rather, of revenue. So definitely a tenant with incredibly strong credit, and it's great to have the site pre-leased to them. Next page, next slide, Aman. Looking at some of the key lease terms, the lease commenced in July 21. Strata expects to start receiving rent from 1st of April. The rent is at 42 rupees a square foot a month, which is super competitive. A lot of average rental in Bangalore would be closer to $1 a square foot, so that's closer to maybe 70 to 75 rupees a square foot. This maybe owing to the pandemic and softness in rentals and uptick, this rental is considerably below the average rental in the market today, which is perhaps closer to 55 to 60 rupees a square foot, and that provides a very strong basis for the tenant to hold on beyond their lock-in term, which is 5 years, and the overall lease term is 15 years. The rent escalation is 15% every 3 years, and the tenant has submitted a deposit of close to 2 CR, which translates to roughly 6 months of rent. And over and above the $42 of square feet of rent, there's also 10 rupees of CAM income, which is common area maintenance, and essentially that's what will be used by Strata to upkeep the building. We spoke briefly about the returns earlier, so just doing a like-for-like comparison with what you might see on Strata's website. If you go there, the target IRR on their website is, and this is pre-tax IRR, is 13.1%. Grip use, this is 12.8%. In the delta is due to a fee leakage to the AIF. Grip in this instance earns its from Strata. We take, and it's something that we have on the website. Grip earns 2% from Strata, but the rest of the fees is charged by the AIF to enable this investment for our users. The profit multiple over the deal, which is, this is a 14-year hold. That's what Strata believes that 14 and a half year hold. That's what Strata believes it could be. given the tenancy the tenancy period is for 15 years, and so but reality is one could look to exit in close to 7 to 8 years. That's the expectation. But just in terms of showing the returns, Strata is building out a 14-year business plan, a 14 and a half year business plan, and so that results in a nearly a 4 times profit multiple on their platform and a 3.8 times profit multiple on for Grips users. The average pre-tax yield is 10.33%, and so this takes into account the the obviously the escalations, the 3 yearly escalations that are logged in with the tenant. 10.33% yield drops to close to 10.1% for a Grip user, and in the first year, the year one yield on Strata's platform is close to 8.88%, and for a Grip user is 8.67%. This, by the way, also includes a 1% top up rental that Strata is offering to their investors, and Grip users will be eligible to get that benefit in year one. I'll pass over to my colleague Aman, who will talk through in a bit more detail about the structure and tax implications.
Sure. Thanks, Siddharth. Everyone, thank you for joining the webinar. My name is Aman, and I'm a manager in the new initiative strategy department at Grip. And Siddharth and I work very closely. He mentioned that we are bringing new asset classes to Grip's platform, and this is just one of the first ones in the pipeline. So just to pick up the structure briefly. The way we are looking at this, if you were a Strata user, you would be directly investing in the securities of the SPV. What Siddharth had mentioned earlier is that the asset is not directly owned, but the way the investment is structured is that all investments are taken in form of securities into a special purpose vehicle, which is set up. This is a very common structure followed by all commercial property investments. And what we're doing here is that we're partnering with an AIF. We act as a technology partner for them, and our users, become end up holding units of the relevant scheme that the AIF puts up. And the benefit of that is really that AIF is a pass-through vehicle. We will cover that more, when we talk about taxation. But that's just a brief overview. So we mentioned that this entire investment is sort of rooted through an alternative investment fund, which is just one of the SEBI registered vehicles. The SEBI requires that investors who invest in these vehicles should meet certain criteria and calls them angel investors in its regulations. For individuals, we have listed down this criteria, which requires you to have net tangible assets of more than INR 2 crores. By the way, this excludes the value of your principal residence. And you need to have either early stage investment experience, or you should be a serial entrepreneur or a senior management professional with 10 years of PQE. For body corporates, it's a net worth based criteria, and if you have a net worth of more than 10 crores, you're eligible to invest in these assets. And SEBI also requires that when you sign up the documentation, to invest in any of the AIF led assets, you should also invest a minimum of 25 lakhs over a period of 5 years. And in future, we will ensure that we can bring in more asset classes that enable you to meet this threshold quickly.
Aman, I just want to take a pause here because this is one of the most important questions that we're getting on the chat group and the Q&A.
Sure.
Just want to add some clarity because of the nature of the SEBI regulations of the AIF that is being used. These are the minimum requirements that need to be fulfilled for anyone participating in it. For the requirements that are mentioned here, which are the net tangible assets, the experience as a professional, and the commitment of 25 lakhs over 5 years, this is a self-declaration that has to be provided on our platform. We have provided an option to create that self-declaration. It's a tick box that you need to click on the Grip platform and provide. The minimum ticket size that we are currently offering is 1 lakh rupees. And the aim that GRIP has is to give you enough opportunities, both on products like the real estate, but also other products within the same structure of AIF. For example, startup equity that allow you to fulfill this commitment of 25 lakh rupees over 5 years. This is a SEBI requirement. It's a declaration that is required prior to investment and using this structure. The Raj, to your question that you just put on the group, it's 25 lakh rupees per AIF that you participate in. So we will be using a single AIF for all of our transactions. The partner we're using currently is a partner we'll use in the future, and hence any investment that you do through GRIP in this structure will allow you to count towards that 25 lakhs. If you are already investing in a different AIF structure, that is a different commitment. So it's 25 lakhs per AIF structure.
Sure. Thanks, Nikhil. I'll move ahead. Right. So we wanted to, quickly just provide you with a, overview of how exit works in these transactions. So if you were a Strata user and you were directly investing in, any of their opportunities, you would typically have three options. The first option is to have an asset sale, and this happens at the end of the term. The way Strata makes this happen is that if an opportunity comes up, Strata, puts an online poll up for its, the shareholders of the relevant SPV. If the consent of more than 75% of those shareholders of the relevant SPV is obtained, the underlying asset is sold, and the users get, the proceeds of the asset. In our case, since the AIF is the investee entity into the Strata SPV, these decisions in such a poll will be taken by the AIF manager. So that's option one. Option two is resale, and this happens for investors looking at early exits. So both the securities that are issued by Strata as well as those which will be issued by the AIF to our users are transferable in nature. These can be sold, and while Strata has an active resale market, we can facilitate transfer of AIF units on an offline basis with the prior consent of the AIF, because that's who's the manager and the leader of the structure. And finally, it comes to having a private sale. So you could identify your own friends or family who would be interested in buying your share out, and you could put up an application, and that's something that is permitted on both the platforms. I just wanted to take a minute here and also talk about how Strata typically mandates a lock-in period of 6 to 12 months across their deals, and then that's sort of applicable to these investments. I'll move on. I mentioned earlier that one of the reasons we picked up an AIF as structure is because of the benefits of having a pass-through status. What that means is, in very plain, simple terms, is that your taxation is considered at par with what would have done if you were directly, sitting on or investing directly in the SPV. So you are absolutely at the same, table as far as the taxation is concerned. We've divided this slide into two pieces. One is, the quarterly payouts. The lease returns are being paid out on a quarterly basis, and these are essentially interest on CCDs. These are taxable for individual investors as per the applicable tax slab rates. For capital gains, which will be attracted in case of exit, which was if you were to do an early exit, early sale, etc., the tax rate would depend on your period of holding. And if the period of holding qualifies for long-term capital gains, you would have to pay taxation at 20% with indexation benefits, which may be available. In case of short-term gains, they're taxed at the applicable tax slab rates. I'd request Siddharth to just cover, the slide which just provides an indicative cash flows and returns of what an investment of INR 1 lakh would look like in the structure.
Yeah, thanks, Aman. So really, what this lays out is, at 1 lakh investment, what could you make over a 14-year hold period, right? And now, again, that hold period sounds long, but it is the base case that's being used by our partner. In reality, we think that, and Strata thinks that this could be a 7 to 8 year hold, which could provide an opportunity for good good sort of appreciation in capital values as well as rentals. So at 1 lakh, you'll see at pre any sort of capital gains tax or Strata's performance fee, there is a return of 12.8%, which was highlighted earlier in the presentation, and the profit multiple is 3.8. Your pre-tax and fee yield is 10.09%. That's average for the 14 years, and it starts off at 8.67 and then sort of creeps up to 12.47% at the end of the lease period. After factoring in capital gains tax of 20% and taking indexation benefit, Strata does assume that the capital value appreciation in this deal is close to 7% as base case, and this 5% inflation, so you get that indexation benefit, but the capital gains still creep in, and that clubbed with their performance fee, which is a 20% over a 10% IRR, which essentially means that any profit you make over 10% IRR, 20% of that goes to Strata, and post marginal tax rate, and we have assumed that to be 30% for this call. The net IRR is likely to be in the range of 10%, which results in a 3 times profit multiple.
So that I just want to take a pause on this page to answer a couple of questions that have come about why this investment opportunity versus others on the GRIP platform that give a higher IRR. The profile of this asset being a real estate asset versus leasing of, say, vehicles or machinery is very different in nature. Real estate as an asset class is a far more secure asset class. Think about owning a piece of a building, depending on which city you're living in. If I could think of owning a piece of a One Horizon Center in Gurgaon, owning a piece of World Trade Center in Mumbai, or owning a piece of the Malia Towers in Bangalore. I think each of these are provide a different kind of security in terms of investment. This is also an appreciating asset class. Value increases over a period of time versus value of certain assets like vehicles decrease over a period of time. Both of them hence have a very different flavor in terms of the kind of risk and accordingly different kind of return. We believe, and the reason for introducing this opportunity is that it is healthy for investors to have different risk returns in their portfolio. It's the exact spirit of diversification, and hence we are going to keep bringing you more and more opportunities that give you the option to have that diversification. There will be assets that we include in the future which maybe give you even higher returns but have a higher risk, or give you even lower returns but have a lower risk. Most of us on this call would have an allocation to fixed deposits, right? And fixed deposits are much lower returning than this asset class, but the risk is much lower, and hence this is the same spirit of it. So I would request you, as you compare the returns, please also compare the risk against the other opportunities that you have on GRIP or any other platforms that you're using.
Absolutely. Thanks, Nikhil. I think this was I believe the last slide of the deck. I think we can start taking more questions. You've answered a couple of them already, but we could start taking more questions. I'm looking through the list of questions to begin with. I think someone asked if real photographs could be shared. So yes, I did put a link out in this chat for the pictures, but also our platform, DRIP's platform, has a pretty detailed memo on this opportunity, and that detailed memo has a link to Strata's webinars as well as Strata's data room. Please do have a look. Do educate yourself with all the documents and information that data room has, and also do listen into the webinar where they articulate the opportunity in greater detail as well.
So that if I can maybe pose a few questions that are on the chat group to you.
Yeah.
in terms of capital appreciation, the question is, A, is that built into the IRR calculations? And second is, what is the assumption on the capital appreciation that the model has?
Sure. So I mentioned this right towards the end. The Strata's base case builds in a 7% capital appreciation, and that is also built in the IRR calculation. So you know, that's now the base case assumption. We have typically seen capital appreciation and growth rates in commercial spaces to be anywhere between 5% and so mid single digits to late single digits. And if just to maybe worth mentioning that if this return was if this was a 5% growth rate, that would definitely have an impact on the returns. There would be a marginal impact on the returns, but also the with the indexation benefit, the capital gains wouldn't necessarily be there either. But that 7% is a rate. At 5%, I think this return of 12.8% that Strata that we were marketing on a pre-tax basis earlier, that comes down to 11.4%. So for every 100 basis points of lower or higher growth rate, the return also changes by close to 600 to 700 basis points in the direction in which the growth rate goes.
Got it. So that the next question is, in terms of thinking about tenure, right? How should an investor think about this? Is it 4 to 5, 7 to 8, 14 years? And is there likelihood of an exit opportunity over that period of time?
Yeah, certainly. Taking the second part of the question first, there is definitely likely to be an exit opportunity. Aman took everyone through the exit options they would have on Grip's platform and what Strata does and how Grip is different. But I think those exit opportunities certainly would exist. Now Strata does they do encourage the investors to hold on to the investment for at least a 7 to 8 year period, and feel that gives the best chance of realizing that capital appreciation of 7% year-on-year growth, as well as this is a tenant with 5-year lock-in. Should for unforeseen circumstances the tenant decides to vacate the asset after 5 years and not complete the entire 15-year tenure, the building is pretty under rented, and it's quite likely to fetch a higher rental at that point in time. I mean, today the building is probably 20% below the market rents, and so holding the asset beyond 5 years is definitely advisable. If you having said that, if you do want to exit earlier, that could be feasible. Worth noting that if you exit within the first 3 years, there is also you're unlikely to get the capital gains tax benefit, the capital gains benefit, and the indexation benefit. So definitely, I think a recommended hold period is 5 to 8 years, but in all circumstances, beyond 3 years would be highly advisable.
Got it. And just to add, I think from Grip's perspective, we are definitely aiming to create those ability to exit in shorter periods of time, and we want to provide that flexibility. That's something that we will definitely be working on. I do want to come back to the question on the 25 lakh commitment. I saw because I'm seeing a few questions on that again on the chat box. One of the specific questions is what happens if we don't do it, right? If we give the commitment and don't do it. I think there's a little.
Sorry, should I take it up?
If I can just add, Aman, and then you can add on to that. I think there is limited clarity today from SEBI in terms of what is to be done if that doesn't happen, right? There is yet to see. SEBI has not come back and said any specific actions against investors who do not fulfill that commitment. I think the guiding principle should be that the commitment has to be made in the right faith of making that investment. Grip from its perspectives would advise you to look at it as a commitment that you do. However, if your specific question is what happens in the case that it is not fulfilled, there is no precedence or specific guidance from SEBI on that action. Aman, if you want to add.
Sure. So Nikhil is right in terms of, while SEBI is silent in terms of what happens if you do not meet the requirements, these are typically, driven by the terms of the contribution agreement that you will sign for each of the AIFs that you would be becoming a contributor to. For the one that we partner with for this pilot deal, these actions could be, for example, suspension or termination of your right to receive distributions in respect of your existing investments. It could also be to suspend your right to make any further capital investments. Sometimes set off some of your investments against fee penalties, etc. But that's just more of indicative in nature of what kind of penalties could come. We would suggest that you should go through the contribution agreement, which covers all of these points in detail.
Yeah. Thank you so much, Aman, for adding on to this. I would like to pose the next question, Sid and Aman, to you guys. There's another question about comparing the instrument with a regular REIT, right? So somebody asked that what is this opportunities, how it's different from a REIT, and what is the advantages which we are posing into this. So Sangal, if you can take that, or Aman, if you want to add into that.
Yeah, happy to go first. Thanks, Vivek. So look, the two products are quite different. While they both rely on the office asset class, they are actually quite different ones. Obviously, REITs are publicly traded. You can buy in pretty small lot sizes. It's a very liquid investment. At the same time, you are at the same, and also there's probably a sponsor who has 20 25 million square feet of office assets leased to multiple tenants, right? Now the reality is that you are also exposed in that case to the fluctuations in public market, right? And so what happened with what's happening in Ukraine right now, or what happened with COVID earlier, the REIT prices, while the underlying assets might not be impacted as much, you are subject to momentum play in the market, and just what the general investor behavior and sense is. You are subject to that, right? Also, public markets are the cheapest form of capital, right? The cost of capital is the lowest. These REITs are incredibly priced, incredibly efficiently priced, 6 to 7% yields, which are again pretty, which are quite low, right? I think what this particular product is offering, and by no means this is not to say you replace a REIT investment with this. I think it's complementary. It's to diversify your investments. This gives you an opportunity to really have fractional ownership in one asset, and it's a lot more tangible in that sense. You're also underwriting and have a good amount of visibility on single asset, single tenant. You'll have access to all the documents, like the lease agreement, the asset management agreement with Strata, yourself, and so it's really something that you can diligence thoroughly yourself, in addition to what the manager is suggesting. And I think more than anything else, it does offer an arbitrage to public market investing, right? A going in yield with a fabulous tenant at 8.67% is pretty compelling when you compare that to public market REITs. So again, it's not to say that you should replace one with the other. It's more complementary, and really the idea is to diversify across the two pools of asset classes.
Got it. Aman, you want to add into this, or should we move to the next question?
We can move in, to the next question for the sake, because of time concerns.
Sure, definitely. I think we'll take one or two more questions, Siddharth, specific to this transaction, and then I'll go to some of the general questions. Okay. There is one on the transaction charges, and it's around that if there is any additional transaction charges which is involved in the resale of these security units in the 7 years. Do you want to pick that up?
Yeah,
Sorry.
sure. Going in, I think we briefly talked about the charges over and above what Strata charges. There is really, and we have put this out on our platform as well. GRIP charges 200 basis points on the invested amount to Strata. There's no charge to the users from GRIP, but then the AIF would end up charging an upfront fee and an ongoing asset management or servicing fee, which helps them, which obviously makes sense for them and keeps the lights on for them. On the secondary sale, yes, at the time of a secondary sale, Strata, who would be enabling the secondary sale or GRIP, could charge potentially a fee that's not baked into the model, obviously, because it's a 14-year case. Difficult to say, to hang our hats on what that would be, but off the top of my head, I would expect that to be close to 100 basis points. So it's not going to be exorbitant fee load that will materially change the returns or a profit multiple for you.
Got it. Okay. Thank you so much for this, Siddharth. Another question is about, and I see a lot of them about whether you can count your GRIP's leasing investment into this 25 lakh rupees commitment which you are making towards the AIF, or what other opportunities will come via this AIF to invest in if you are committing to that 25 lakh rupees. Maybe I can start with the answer, and Sangal and Aman, you guys can pitch in. So the first thing, for the first question, whether we are going to count the leasing opportunity investment and the inventory financing opportunity investment into the AIF structure, the answer is no. The structure for our leasing transaction and inventory financing transaction is very different from the AIF transaction. So the only counting of the 25 lakh will happen in the real estate opportunity which we are doing. Other than this, we are also planning few of the transactions which are by nature driven by AIF. So those opportunity will come in next 3 to 6 months on the platform, and you guys will be able to invest into those opportunities. So you can look forward to investing into them as well. Aman, Siddharth, you guys want to add into this? Happy to get your thoughts.
Vivek, you covered, I think, everything. And yes, I think in near future we will bring in more, asset classes, more investment opportunities which can be enabled through this structure. That's something Nikhil also mentioned, and we can help you ensure that you meet your, minimum commitment requirements.
Sure. Another question from Piyush was to, before you look at this opportunity, you need to tick a box which says, which asks you some accredited investor forums. So, can we send the opportunity without that, or can we share the agreements without that? Aman, you can answer that, or if you want me to, I can add to it.
Sure. So Vivek, I'll take a crack at it, and you can, join in. The intent is that these opportunities should be available for investors who meet the criteria, and that's the reason why. And in addition to that, we've also wanted to make all of our users aware of the minimum contribution requirements, and that's the reason why they're behind an accreditation status sort of wall. Vivek, if you want to take up the latter part of the question, go ahead.
Sure. I think so. Because of the above reasons, we will not be able to share the documents over the email unless you see it on the platform. Once you are in and on the platform, you can see all the documents. Everything is there on the platform built itself. There are two questions about GRIP. I always see one question coming again and again, which is about when GRIP is going to launch the app. We are definitely working on it. We'll soon come up with a app version. Not but not saying no to it, but it's a little far from today. I think we can pick up the last question. I think one more question is, I've seen it twice on the chat, is about the taxation treatment that for the returns which investors are getting, how the taxation treatment will happen. Aman, Siddharth, you guys want to share some light on that?
Right. So, we briefly covered this during our slides. We typically see two sort of, tax incidence events. One is, your returns that you will make on the, on the leasing side, and that is structured as interest income on CCDs that are held by the investor. So, for individual, Indian resident investors, the taxation happens as per the applicable tax slab rates, and the other incidence is capital gains, which takes place when you sort of sell your holdings in the AIF, and that depends on whether it's whether your holding period and whether long terms or short term capital gains would be applicable.
Siddharth, you want to add into this?
No, I think we can move forward.
Okay, cool. Okay. I think in the interest of time, Siddharth, you want to take the last question. This is about what will happen if GRIP / Strata stops its business? What will happen to the SPV? What will happen to the AIF? What will happen to the investment? And then we can close this round for today.
Yeah, sure. So look, I think if so, there are obviously two parties involved here, right? There's Strata and then the AIF. Now, we have done a tremendous amount of partner diligence to be incredibly comfortable with both these parties and their track record so far, the teams that they're building out, the presence they already have. I mean, with Strata having more than 500 crores of worth of investments already under their belt, and I think with 2.5 million square feet of space under management. We do think these parties are as credible as they can get, and so having said that, if they were to cease operations for whatever odd reason, ultimately the agreement, they're simply a manager of this investment, right? Ultimately, there is an agreement. That you have with you're a shareholder in the SPV, and the shareholders will have the right to bring on another manager, change the manager, and continue to work with the tenant and the developer if required. Also, it's worth mentioning that the SPVs do have independent directors. And so they would be the ones to take on responsibility and ownership should such an unforeseen circumstance arise. I think that's maybe on the AIF, Aman can touch upon that.
Sure.
If there are any challenges with the AIF.
Sure. So let me just take up the latter part of the question. We mentioned that GRIP is just acting as a technology outsourcing partner to the AIF. Your investment is actually, being transferred directly to the AIF, and you get units of the AIF. So if an unfortunate event happens where GRIP stops its business, your investment in the AIF would be remote from any of those events, and it would still continue as business as usual.
Cool.
So maybe there are a couple of things that I'm reading, and I could answer very quickly. So someone has asked, when do you start accepting subscriptions? We are already accepting subscriptions. I think close to 24-25% of the deal is already funded. We're looking to raise 2 crores. Strata is to raise 59 crores. So out of that, the 2 crore fundraise that we have enabled for our users is already 24-25% subscribed. Please go on the website and just register. There is a question about can this AIF help me to invest in private equity, in angel networks and VC? Aman, would you like to take that?
Absolutely. So, like we mentioned earlier, we are, actively looking at bringing in more asset classes. If you become a member of this AIF, you would be eligible to all investment opportunities that can be executed through this AIF partner, and those could also be in the startup equity space as well.
Yeah. Someone has asked about, this is a Cat 2 AIF. There should be minimum of 1 crore investment, which is not the case. This is actually a Cat 1 AIF. A related question is whether this will be hosted on Angel List or Let's Venture. Well, we don't know that for now. But obviously we will continue, for our users, we'll continue to work with whoever we think is the best provider of the AIF services, and at this point we already have a partner in place. But whether it could be on Angel List or LV, we'll find out. Just looking through a few more questions.
I think with the same question, Siddharth, we can take the last recent question is, if somebody has invested through one AIF and if they are now investing through our AIF, do they have to do the double commitment?
Sure. So let me take this up. That will not happen. Your 25 lakh commitment is AIF, per AIF. So for each AIF that you end up becoming a contributor, you're required to meet the 25 lakh criteria over a period of 5 years.
Okay. Thanks, Aman. There's another question about rentals. Why is the current rent below market? So look, really, it's a function of the environment that we are in. We have gone from 2 years of COVID impact into right into a war, and who would have thought about that? So there is definitely some uncertainty, not some, but a tremendous amount of uncertainty in the markets, and the tenants are using that as a to their advantage to say that, look, if they are leasing 7 out of 15 floors in a building, they should have a preferred rental, right? So it's really it's a function of two things. One, where the current rentals are. So the leases that were signed a couple of years ago or before COVID were obviously at a higher rental and continue to be, right? And so that's obviously at a significant premium to where the new leases that are being signed today, and especially the ones where the tenant is taking up significant space in a particular building. I think there was a related question earlier. How many floors has the tenant leased? So this 75,000 square feet is entirely leased to this one tenant. There are 7 floors. All of them are leased to the same tenant. For DRIPS users or Strata's investors, there is not an inch of unleased space when they invest in the deal. Just looking at the questions here. I don't see anything that we might have missed out. Aman, Vivek, if there's anything that you spot we haven't covered, happy to do that in the next couple of minutes.
No, I think we have covered everything. Thank you so much, Siddharth and Aman, for hosting this and giving your share of knowledge about this investment. To the investors, thank you guys for joining on a Saturday evening. Overwhelmed with the questions. We're very happy to receive all these questions on email as well. So you can connect. You can send your questions if you are not able to answer some of your questions. Please send it to them on invest@gripinvest.in. Connect with your RM. If anything else is needed, all of us are available. Just write it back to us, and we'll write the answer to you guys. And with that note, I'll finish this webinar. Thank you so much, everyone. Thank you so much for your time. Good night.
Thank you, everyone.
Bye.
Bye. Have a good weekend. Bye.